Hi guys, thanks for tuning in to another episode of Nuggets News or Trader Talk with Charting Man Dan. How you going, Dan?
Good, Alex. Good to be here.
So today we're going to talk about cryptocurrency and how it fits into the entire markets because the markets have been pretty volatile lately, and this is the first time when crypto's been a significant asset class, I guess, Dan.
Yep. In the past year, obviously, we've seen a lot of adoption with cryptocurrency, and coming from a markets background trading stocks, I'm very interested in how it's going to react the first time we're not in a bull market. We've been in a bull market for 7, 8 years at this point, and once there's some fear in this market, we're going to be seeing, how does this new asset class, how's it going to react? And is money going to go into it, or are people going to get scared of everything and pull their money out? And that's going to give us a lot of information.
So to start off with, we might look at the interest rates on the 10-year Treasury note. And for those people that don't really follow this stuff that closely, basically interest rates have been at record lows. Ever since the GFC, they've been at or near zero. And now for the first time around the world, there's sort of talk about raising interest rates and that going back to normal. And that affects everything from our mortgages to, every sort of loan that you're going to get is based off that very base interest rate.
Yep. So it's essentially, it's more of an incentive. The higher that number is, and the chart for TradingView is TNX, but the higher the interest rate is, the more incentive people have to take money out of the stock market and put it into this guaranteed safe haven. It's more of a risk to reward factor, saying, okay, we've been running for a decade. We've had a crazy last year ever since the election. And, it's time to take some off and put it into a safer place. And that's what we're looking for. And for me specifically, I'm looking at TNX, and the 3% level is a psychological level that a lot of people are looking at. And specifically in terms of technical analysis, I'm looking at 3.04. And we can see if you zoom out long term on the weekly time frame, it was almost a double bottom down below 150. And then we started forming the higher low and higher high. And this is looking at multiple years of data. And as a day trader, I normally don't do that. But for macroeconomic stuff, I'm starting to do that more as I'm in the housing market myself, potentially looking to buy. But some of the stuff that I'm seeing, I'm going to hold off and probably rent for another year and wait to see if we do get some pullback that people are looking for.
Yeah, and I know particularly in Australia, there's a lot of people that have taken out those, interest-only loans, and there's property's a huge, investment strategy in Australia. So as soon as those interest rates start to creep up, and in some instances, your payments could be double, and that, the rubber hits the road, as I like to say, and reality gets pretty real pretty quick for those people who are living paycheck to paycheck, and all of a sudden their mortgage repayments are double what they previously were because interest rates may have doubled. So that's the first thing that's going to be very interesting to see how this plays out. And we've had crypto as an asset now, as a bit of a safe haven, as well as maybe precious metals and other asset classes. But the Nasdaq and tech stocks as well is probably the next thing we want to look at, Dan. I'll bring that up for us.
Yeah. So for me, with the general markets and the S&P 500, the Apple for me is the most important individual name, because Apple is the biggest holding in most tech holdings, and the tech sector is the biggest holding in most major markets. So I'm watching the tech sector very closely, and we're starting to see, again, like you said, a lot of volatility. We saw a big pullback, a little bit of fear, a big bounce, but I'm looking for weekly equilibriums to play out. And I think that, towards the end of March, if we get a break of this equilibrium pattern, it's going to give us a ton of information. So first, we have to see that the equilibrium pattern is going to form, and we'll know that in the next week or two. But if that is how it plays out, we'll get a very clear bear break where we will start forming weekly lower highs and lower lows, which has not happened in a long time, or we'll get a bull break and we'll be back right to all-time highs again. And I've learned long ago to not fight the trend, regardless of whatever the macroeconomic stuff says. As you say, you're saying with the markets can stay irrational longer than you can stay solvent. So if big money wants to run things, and they've been doing a great job at doing that, I'm not going to try and time any kind of top. I'm going to wait until the weekly trend shifts for some longer term downside signals.
Yeah, I mean, I've got that weekly chart up, mate, and from the bottom in 2009 to now, that's less than 10 years, and the market's up nearly 600%, that's pretty crazy for one of the biggest markets in the world. A lot of people want to call crypto a bubble and whatever, but yeah, that's very important what you were saying. So I think Apple comprises of, is it 10% or even a bit more of the Nasdaq? And there's probably those big stocks, the FANG stocks, which comprise, a large percentage of that index. So When
Yep,
Apple,
absolutely.
when Apple moves, the Nasdaq moves basically. So how do you think this is going to play out, mate? If you had to have a bit of a guess, and just on the daily chart, even now, we've had a big red day today in the tech stocks, and for the first time, we've had a big green day in Bitcoin. So that's interesting in and of itself, and it's good to see.
Yeah, I personally, I watch every day. Like I said, I trade stocks every day. So I'm looking on the 5-minute time frame, tick for tick. Is there a correlation with Bitcoin in the overall markets? And I haven't seen enough that makes me confident that there is. But again, once we see market weakness, and I'm not going to be looking for market weakness until we get a weekly lower high and lower low, that will shift the trend. But once that happens, I want to see where money goes, because this past couple of weeks where we did see that big pullback in volatility in the markets, money wasn't going into gold. And we're used to seeing that happen, and it wasn't this time. So that was very interesting to note. And I'm very curious, is money going to go into crypto? Because if the stock market pulls back and money goes into crypto, that's going to be more bullish than any news that crypto could give us. Just the fact that people are willing to trust it to be a safe haven, that would be a very significant development, and it would gain a lot of trust with crypto around the world, in my opinion.
So basically, there, just to sum up what you were saying, you watch it every day to see if there's even correlations on the 5-minute time frames about one trading inverse or correlated. But what we really want to see, and what would be the best case scenario, is if large amounts of money are moving out of these capital markets, and then we notice that it's moving into Bitcoin. That would be absolute game changer. Whereas something else might be, we notice it moving into the US dollar or another traditional type of asset, and crypto trending down as well. That would be the bad scenario, I guess.
Absolutely. If you're in cryptocurrency, you want to see an inverse relationship to market weakness, essentially.
Yeah. Awesome. Well, thanks for joining us again today, Dan. It's been an interesting chat as always, mate. Any final thoughts?
Always prepare for anything and expect, again, most bullish scenario would be if money goes into crypto, but don't rule out if the market dumps and money starts escaping crypto real quick. We have to be prepared for that scenario and say, okay, in 2008, when everything crashed, gold didn't really see a whole lot of bullish action, and we saw money leaving everything, even safe haven sectors like the utility sector. Money was leaving everywhere. So we have to be ready for that possibility as well. What's your game plan going to be? If the markets crash and crypto crashes with it, are you going to hold? Are you going to go all cash and look to reload? Having that game plan established will prevent from emotional reactions in the moment.
Great advice. And I think when Trump got elected, that was sort of on Australian time. I just remember the markets all crashing, but all that was people pulling money out of everything and then reshuffling where they wanted their chips depending on where they thought Donald Trump was going to spend more money. So you've got to have a game plan. You've got to be aware of all possibilities. So thanks for joining us again today, Dan.
Thanks for having me.
Cheers.